So ladies and gents, it's now 12:30, so it's a perfect time to start this afternoon's webinar. And this afternoon's talk is titled How to Save on Your Car Insurance, and it's hosted by My Money Matters. Now, let me introduce myself today so you know who's speaking. So my name is Greg March, and I'm a Senior Financial Educational Coach for My Money Matters. And I've got the pleasure of taking you for the next 20 minutes or so, exploring how we can save money on what is our car insurance. But just before we start that, let me just give you some important information. First and foremost, the content from the webinar we're about to discuss has been designed and provided purely for educational purposes only. So please don't take anything that I say today as regulated financial advice. And also the information I'm about to give you is based upon our current understanding of legislation and regulation, which could change in the future. And the webinar may be recorded for training and compliance purposes. Now, if you've got any questions today, then feel free to ask those questions. And the platform you've got for asking the questions is the Q&A box that you can see on the top right-hand side of your screen. So whilst I'm going for the content, if you've got a generic question that you wish to ask, then please drop it in the Q&A box and I'll answer that question for you. I would say there is roughly a 30-second delay, though, between what I'm saying and what you're hearing. So get those questions in bright and early if you can. And remember, keep them to a generic basis. Now, just before we start the actual webinar itself on how to save on car insurance, what I want to point out is that recently we've changed from AVC Wise to My Money Matters. Now, the reason for that is so that we can broaden the education that we can offer you ongoing. So instead of just giving you education that's purely based upon retirement, we can also now offer you education on anything that relates to where you are when it comes to your, in brackets, cycle of life. So we can offer education, if you like, on debt and money management. So this is where we can talk about mortgages. We've got webinars on credit scores, and if you do struggle with debt, how you can help yourself get out of debt. We've got webinars and education around savings and investments. So we'll talk about goal planning, how you can set budgets, understanding savings and investments, which is a popular one for a lot of people, and also understanding taxation under estate planning, which does become more and more applicable to more of us the older we get. We've got content here that can look at how we can save on things like inheritance tax with a little bit of planning. We can talk about long-term care. Unfortunately, the negative sides of getting older, things like funeral planning and the lasting power of attorney. And we've got education as well as on insurance, and as you would expect, all of the education that relates to the shared cost AVC and retirement itself. So this is the new platform that's available to all of you. It's known as My Money Matters. And what I would say is, why not drop back onto the platform at any given stage and go onto one of these websites, because it could help you going forward. So keep coming back and we'll keep changing the content. But today, though, what we're going to do today is we're going to talk to you today about car insurance. And the reason I want to talk to you about car insurance today is it's getting quite expensive for all of us, and it is a rising market. So I'd like to explain why car insurance prices are increasing, and then things that maybe we did know or didn't know about car insurance and the quotations itself. Then more importantly, what I'd like to do is give you some tips, hopefully tips you haven't heard of, on how you can save when it comes to car insurance going forward. So today's webinar is a short webinar, but it's designed to make you think about what we currently do with car insurance. And remember, if you've got any of those questions, drop them in the Q&A box and I'll answer those questions for you at the end of today's talk. So let's start off by looking at why car insurance is actually increasing, because I don't know about you, but I had my car insurance quote come through the other day and I was flabbergasted with how much the insurance has actually increased by. But let's look at why we think it's gone up. Now, Heritage Car Insurance, so they're a car insurance organisation in the UK, and they've basically stated the following, that the reason for spiralling costs in car insurance is down to a couple of factors. So this is where the blame game goes. And the first blame, they're blaming it upon the pandemic. And what they're basically stating, which I think does make some viable points, is that COVID itself caused major issues with supply chains and labour shortages. So what generically happened through COVID, people weren't able to come to work, and that had a big implication upon the cost of car insurance, especially when I explain why, then you'll hopefully see why that occurs. So with COVID, what it basically did, restricted the movement of supplying goods. But when the demand then came back after the pandemic and the economies then reopened, due to the pandemic, there was a problem with staff shortages. And what that basically meant was that when after the pandemic, in brackets, finalised, they had to bring those staff back. And because of that, the raise in the wages were raised dramatically. So they're actually putting down that they're having to pay for higher costs on wages today to retain and attract staff, because they had to lay them off because of the pandemic. So that's one reason why the stating that car insurance has gone up by the way that it has. And also the second point for the increase in car insurance is down to the rate of inflation that we've had recently. And I know today we've kind of leveled out a little bit when it comes to inflation, but you only need to look back over the last 2 years that inflation literally went through the roof. It went into double figures. And it's because of that as well, when we're looking at the cost of car insurance, then The Guardian came out and they reported the following, that the average car insurance in the UK now nears £1,000. That's the average cost of car insurance in the UK, and that's covering all spectrums at all ages. And that's showing an increase of just over 58%. And to take that data even further, there are a couple of organisations in the high street, Confused.com and WTW, and they've stated that the following, that between 2023 and 2024, if you were a motorist between the age of 17 and 20, you would have seen the cost of your car insurance double. So that's between 23 and 24, the cost of the car insurance would have doubled because of those factors we've just discussed. And also Confused and WTW also state as well that if you're an 18-year-old, that today you can expect to pay more than £3,000 for your car insurance for the first time. And for the majority of other people, if you're a driver up to the age of 43, then you can expect to pay more than £1,000 on average. So this has been reported by The Guardian in January of 24. So from this, what we can see is that car insurances have gone up, and what we need to be now is a little bit more proactive and being clever, if we can, to understand how the car insurance quote actually works and question what we could do to potentially bring the cost of that car insurance down. So let's just talk about car insurance and the quote that you get. So when you receive a quote for car insurance, as you're probably all well aware, that the cost of your car insurance is based on a lot of factors, and one of those factors is your age. So if you're a young driver, that impacts the cost of the car insurance. If you're a newly qualified driver, that's going to impact the cost of the car insurance. And also on the other end of the scale, if you're an older driver, that's going to impact the cost of car insurance as well. So age is a factor when it comes to the cost of your car insurance. Another factor you've got to be aware of is the postcode that we live in. So if you do live in an area of a postcode where there are high levels of accidents or even high levels of crime, then just be aware that on its own, again, can massively impact the cost of your car insurance. And as you would expect, the type of car that you're driving, so if you've got those really powerful cars, then be aware you're going to be paying more than somebody who's got the car that they just drive around steadily on a weekend. And other things that do impact your car insurance as well, as you would expect, is mileage. So if you're in the situation that you're doing lots and lots and lots of mileage, you can expect that your car insurance is going to be slightly higher than the norm. But on the reverse of that, also understand as well that if you're in the situation that you don't drive too many miles, then that's going to impact your car insurance cost as well. And potentially by not driving enough miles, then the cost of car insurance for you could increase because they see you as an inexperienced driver. So if you're driving less than the average, which is 6,600 miles per year in the UK, by driving less than that, then what you potentially will see is a slightly higher cost to your car insurance than one that was driving 6,500 miles plus. So just take that into account as well when you're questioning the cost of your car insurance going forward. And one of the things you might want to consider as well is that when you go onto all of these online car insurance providers, they will ask you to put down the job title that you currently have. And for some of us, we might just go for the closest job title that matches what we do. But again, you might want to consider that because some of these job titles are actually seen to be by the insurer to be riskier than others. So you could put yourself down as job title A because it's kind of close to what you do, and that could impact the cost of your car insurance. So you might want to consider maybe speaking to the insurance if you don't see a job and ask them to tell you the bandings of what job titles and what impact that could mean upon your insurance. So a simple change of a job title to something that fits what you do more than what's online could impact the cost of your car insurance. And also on a personal basis, be aware as well, and as you'd expect this, if you've got convictions or claims, that will damage your car insurance, but I'll explain how we can potentially protect some of that in just a moment. And guess this, when you decide where you're going to park the car, then that will impact the cost of your insurance as well. So when you put in for a new car insurance, they'll ask you, where do you park the car? And you might say, well, I'll park it on the street outside. You could say, I park it away from home because there's no spaces where I am, or even I stick it in the garage. And all of these could have an impact upon your car insurance. And it isn't as straightforward as stating, I stick it in the garage, therefore it's safe, my car insurance will be less. It could actually increase your car insurance, and I'll come back to that in just a moment. And then also, when we do apply for car insurance, we do see that there are different versions of car insurance that are available for us in the marketplace. So we've got the third party only. We've got something called third party and theft. And we've also got something called fully comprehensive. Now, when you're looking at the types of cover, you think automatically by having the fully comprehensive, that could be more expensive than the other versions of car insurance. Well, again, that's not necessarily so. So let me just talk to you about what these types of car insurances actually give you. So when we're questioning what is third party fire and theft, and what is fully comprehensive, let's look at the following. So when you apply for third party car insurance, this is the legal minimum. So this is the lowest version of car insurance you're allowed to have to be legally upon the road. And under third party car insurance, what it simply does, it only covers the claim made against you by other people. So if you're in the situation that you were to smash your car's off the road, this only protects you against the claims made by other people. You're then in the situation that you still then need to find money to replace or repair your car. Third party fire and theft does exactly the same as third party, but it also covers you if your car was stolen or damaged by fire. And remember, this is generically to the car, it's not what's inside the car. So take that into account as well. But then the most common form of car insurance today, as you'd expect, is fully comprehensive. So this protects you to everything that the third party fire and theft does, but also it protects damage to your vehicle if it was in an accident as well. So the third party not only protects against claims that are made to you, it's also protected against the vehicle that you're in as well, so you can reclaim upon that. And it's not necessarily cheaper always to go for third party, and we'll come back to that one in just a moment. Now, when you're applying for your car insurance, one of the things you will see is you have an option to protect certain things. So we've got no claims discount, and we have the option to protect this. So let's kind of talk about how this works. So when you're applying for car insurance, if you wish, there is an option where you can have no claims discount included. And what this simply means is that you get a discount for going years without a claim. And for most organisations, the bigger the discount they'll give you is based upon 70%. So that's the maximum discount that you can get from most organisations. So let me give an example of what we mean by a no claims discount. So let's work under the principle that we've, let's say, got 30% of a discount built up. The cost of the insurance for that year would have been £1,000. But because we got 30% discounts and no claims discount, it means we're reducing the cost of our insurance by 30%. So this means that we now have a discounted price of £700 per year for the insurance. So the discount actually applies to the cost of the insurance itself. Now, again, when you're applying for your car insurance, you will be asked if you would like to have no claims discount protection. Now, what this allows you to do, it allows you to claim one or more times per year without damaging your discount. And I'll give you an example of how this works in just a moment. So you're allowed to have one or more claims per year without damaging that discount that you can see on the left-hand side of the screen. Now, unfortunately, it does not stop the cost of your car insurance increasing after an accident. So it protects the discount, but it doesn't stop the cost of your car insurance increasing. So let's give you an example of how this works. So let's say we've got 10 years protected no claims discount. And unfortunately, we have one accident this year. Now, because we've got the no claims discount protection in place, we still have the 10 years protection. Now, when you've got protection, what most companies will allow you to have is, like I said, one or more, but it does vary. So if you've had 3 or 4 accidents in 1 year, then that no protected claims discount will still mean the price of the insurance will go up and the discount will be as much. So generically, this is restricted to a number of accidents per year. Now, under the no claims discount, because you've had that accident, your no claims discount still stays at 10 years because you've protected that. but the cost of your insurance will still increase. And again, I'll give you an example of this in just a second. Now let's look at the same scenario. Let's say we've got 10 years and we haven't protected that discount. So we've got 10 years and we're in unprotected discount. We've had the same accident this year. Now, because we don't have any protection in place upon the discount, what normally happens is when you have an accident in your car, your insurer will actually reduce your no claims discount by 2 years. So if you have one accident, they'll reduce your discount by 2 years. So under this example, you go from 10 years no claims discount down to 8 years because you haven't protected that discount. And again, as the same as the protected, as you would expect, the cost of insurance would increase. So let me then give you an example just to show you how this works, because a lot of people find this bit a wee bit confusing. So with the 10 years protected no claims discount, we've got protection and we've got 60% discount protected because we've had one accident. So what this simply means is that when we have a look at the premium will increase from £300 to £1,000 because of the accident that we have. And this is just an example. But we've got the protected discount, which equates to 60%. And that means that on an annual basis or a monthly basis, whatever the way you do this, you'll then only pay £400 towards the cost of your car insurance. And that's because the protected element at 60% has been protected because of the no claims protected element that you've bought from the car insurance. But let's say you didn't buy the protection because you wanted to have a reduction in the cost of car insurance for the year that you took this out. This is what happens. So you've had your accident. The premium goes from £300 to £1,000, but you've lost a year of that protection or 2 years of that protection. So you've gone from 60% down to 40%. So what this simply means is that the cost of car insurance, instead of being £400 if it was under the protected scheme, would be £600 under the unprotected scheme. So because you haven't protected the no claims discount, ultimately on accident, the cost of your car insurance will be higher than if you protected it. So just be aware the no claims discount is against the protection for the number of years you've got, and it protects the discount only, not the overall cost of the insurance. Now, hopefully that's made sense. If it hasn't made sense, then feel free to come back to these webinars as often as you can do until this does hopefully help. So let's now give you some cost saving tips when it comes to looking at your car insurance, especially if your car insurance is due in the next couple of months. This could all help you going forward and help you save a little bit of money. So the first thing, as you'd expect on any type of thing when it comes to financial education, shop around. Use the comparison sites to get the quotes, and remember some of the comparison sites do give you some good benefits, but also remember go to those organisations as well that don't appear on the comparison sites. So organisations like Direct Line and NFU Mutual, don't go onto those direct sites. So get a quote from them and then compare it from those comparison sites as well. Now, when you're questioning how to pay your car insurance, you do have the option to pay the car insurance on a monthly basis, and you also have the option to pay car insurance on an annual basis. Now, all I'm going to say to you is this, is if you decide to pay for your car insurance on a monthly basis, it will be treated as a loan. And because it's treated as a loan, then generically what happens is the car insurance organisation, the company you've gone through, will charge interest on that loan. And I was doing a little bit of research this morning, and it states that between the majority of organisations, according to which, for this year, will charge you interest ranging between 20% and 36% of the cost of your car insurance for that year will be the interest that's applied. So that's a massive amount of interest if you do a monthly payment rather than an annual payment when it comes to your car insurance. So again, it's easy for all of us just to have it on a monthly payment, but you'll be paying a lot more than you would be paying if you borrowed money elsewhere to cover the same amount. So just question that going forward for yourself if you can. And also think about bundling policies with the same provider. So there are lots of organisations out there today that state if you do take a policy with ourselves, if you have another car insurance, we might reduce the cost. If you take out a different form of insurance with us, we might give you a discount as well. So just consider that bundling of the policies with the same provider to see if you can reduce the cost. It might be a multi-car policy that they offer you in the house, and that can drop your cost down substantially. And one thing you need to be careful of when you do apply for car insurance are all those extras that they offer you. So when you're applying for car insurance, let's say, would you like to have road cover included? Would you like to have legal cover included? So everything that you click on, as you'd be aware, will increase the cost of your car insurance. But remember, if you're paying for this on a monthly basis, then by default, all of those things you're taking out are going to be adding to the cost of that loan. So if you're comparing car insurance today and you add on your road protection, remember you'll be paying the interest rate that we've just quoted between 20 and 36%. You might be better just looking outside to see if you can get things like road protection on its own. And unfortunately, in today's marketplace, it still does not pay to auto renew. I know the government's put things in place that says you cannot charge somebody more by being loyal and auto renewing, but I don't think that's fully gone through now to every single organisation, because I myself got a quote through for insurance today or yesterday, travel insurance albeit, and the price is massively different if I auto renew. So all I'm saying to you is just remember, always shop around. It takes you 5-10 minutes to shop around, but just do it as well. And one of the things I would say to you is when you do shop around is remember you've got those sites out there that can actually give you money for going to different organisations. So think about those cashback sites as well. So on an annual basis, when you shop around for car insurance, try to do it maybe through something like your Quidco or your Top Cashback, where they pay you money for taking policies out via their website. So not only can you save money by shopping around, you can also get a little bit of money back. And think about your security on the car. Now, a lot of organisations, if you tell them that you've got a dash cam, will use that as a measure to reduce the cost of your insurance. So if you do renew your insurance, and let's say you're on the phone, or if it's not on the phone, if it's online, drop them a note and say, I do have security measures in place, such as dash cam cameras. Would that reduce the cost of my car insurance? Now, a lot of them do reduce the cost of your car insurance if you've got those apparatus in place. And as discussed, the no claims discount, the longer you protect that, the better it's going to be for yourself and the more you save. So if you are in a situation where you are unfortunate, where you do have a slight prang in the motor, then that no claims discount can actually massively make a difference when it comes to the cost of your car insurance going forward. And you've got to understand as well that we can impact the cost of our car insurance. So if we're in the situation that we do have a couple of speeding tickets because we don't understand the speed area where we are, or we've got traffic violations, every single thing that we've got going our way ultimately will increase the cost of insurance going forward. And one of the things you may want to consider, irrespective of age, is by adding a name to the driver. So when you're on the policy and it says, would you like to add a second driver on the policy that can drive your car, just test it to see what the cost is going to be. Because for a lot of organisations, when you add in a name, it actually brings the cost of your insurance down, irrespective of age. I was speaking to a colleague the other day who was thinking about taking a family member off his car insurance for a specific reason. But by doing that, even though he was in his 50s, the cost of his car insurance was to increase. So irrespective of age, think about family members. If you're an inexperienced driver, think about getting somebody more experienced added onto it. And even if you're an experienced driver, also think about putting on maybe a partner, because all of this could reduce the cost of the insurance for yourself going forward. And going back to the type of cover that you apply for. So remember, when we're looking at car insurance, you've got the different versions of car insurance. Some of those are going to be more expensive than others, but not always will the cover you've got be the cheapest if you go for the cheapest option. I'll come back to that in just a moment. And where you're parking as well makes a major difference to the cost of insurance. And please don't assume that if you park in a garage, it's going to be the cheapest place for your car based upon the area that you're in. And what I mean by that is that every single car insurance that you go for, every single organisation will have a database of what's happened in the area that you're in. So you could be with car insurance company A, who've had a lot more claims for people putting their car in a garage and scraping the car trying to get in and out. So because of that, if you go for the same insurance company and you park yours in the garage rather than on the road, you could be paying more for the cost of cover. So it might be worthwhile having a conversation with your car insurance company and asking the question, in your opinion, where would it be better for me to park? Would it be cheaper if I was to park on the road? Or would it be cheaper if I park in the garage? Speak to the insurer and find out. And again, that does make a difference. And going back to the type of cover, we mentioned before, you've got your third party fire and theft and so on. Now, again, it depends on what type of car that you've actually got, but some cars are actually cheaper if it's fully insured, so fully comprehensive insurance. So don't always assume. So if you are thinking, well, I'll get third party fire and theft because I'm a young driver or I've got a young driver in the family, also get a quote on fully comprehensive as well. I think for some of you, you could be quite surprised. And again, if you do have young drivers in the family or a young driver yourself, you might want to consider that black box where you've got the telematic insurance. It considers your driving skills. So what it takes into account is how quickly you drive, the braking, the cornering. And if you drive sensibly, then the cost of insurance will be a lot cheaper than if you drive erratically, spinning the corners and all of that. So it monitors how you drive, and all of that could make a major difference. And there's one thing that a lot of people don't actually consider when it comes to driving. If you apply for an advanced driving status, so this is where you become an advanced driver, then the cost of your insurance could reduce by 15%. Now, that doesn't sound a lot, but that's 15% per annum that you're saving on the cost of car insurance. Now, if you research online to start your advanced driving motoring skills, I think it only costs you £150. So way up, £150 to improve your motoring skills, less chance of having an accident, and that's going to reduce the cost of your car insurance going forward. So it might be something you might want to consider. And out of all the tips I'm about to give you when it comes to saving on car insurance, I think the following one is the most important. Time your renewal right. And what we mean by this is that when you're looking to renew your car insurance, if you wait until, let's say, the 30th of March when your car insurance is due, the insurers will boost your price, and they'll boost your price massively. And the reason for that, you've got no alternative but to take the insurance out on that day. But if you get a renewal and you start looking for your car insurance roughly 3 to 4 weeks prior to that renewal date, that's when they quote there is a sweet spot where you'll get the cheapest insurance available. So if you plan ahead and look for your car insurance roughly 3 to 4 weeks prior to your renewal date, that's when you'll see your premium at its cheapest. From that, it just certainly starts to ramp up. So get yourself in the routine that you take on board these saving tips if you can. Shop around. Remember where you park, what type of cover you've got will have issues. Remember that no claims discount as well. And also just be proactive. Get your car insurance set up. Tick that box 3 to 4 weeks before it's due, then hopefully you can save on the cost of insurance going forward. And then that will then save a little bit of money today that you can put that money towards other things. Now, if you want further support on how you can help save money when it comes to car insurance, what I recommend that you do is have a look at our platform again, because we do give you options to access this organization called Snoop. Now, what Snoop is, it's an online application, so you can have it on your phone as an app, and they have lots of money saving ideas for you. And they'll also talk about the best possible types of insurances that are available for you as well. In addition to that, Snoop will also give you budget planning tools and basically bring all the banks in one place. So it's a really powerful tool, and it's a very good starting point on working out how you can save money going forward. So you've got all the information you need in hand. So even if you work, you can mess around with your car insurance in the lunch hour and get it sorted rather than having to go home and do it on the main PCs. So look at Snoop if you can. It doesn't cost you anything. And if you click onto the Snoop icon on My Money Matters website, it will then give you a QR code that will show you how you can join Snoop. It doesn't cost anything. It can save you money. So why not? Now, in addition to that, as I mentioned right at the beginning of the webinar today, we do have lots of other educations available for you. And we've created education based upon what we call the cycle of life. So we'll give you education based on wherever you are. So it might be you're starting out today on your journey and you need a bit of support on understanding mortgages. We have mortgage webinars, especially for the first-time buyers. We have webinars, as we mentioned before, on the end of a journey that relates to things like inheritance tax, funeral planning, and anything in between. It doesn't cost you anything, and all it does, it gives you the knowledge for you to make the right choices. So what I would say is keep coming back to My Money Matters platform, make the most of the platform going forward, and it will enrich yourself when it comes to your financial well-being. So ladies and gents, that's it for today. So hopefully you found this webinar of use. If you need to contact us, then feel free to contact us on the information you can see on the screen. If you've got an idea as well for content that you can't see on the My Money Matters platform, then feel free as well to drop me an email at suggestions at mymoneymatters.co.uk. So that's my-money-matters.co.uk, and I'll try to get that information, education on the platform for you. So if there's nothing, or there is something on there that you can't see that you need help on, then drop us a note and I'll try to create that information for you. So what I'm now going to do, I'm just going to jump to a different screen to see if we've had any questions come through. And I can't see any questions come through. So ladies and gents, what I'm going to do is just say thank you for your time and attention today. Make the most of the education. If you can save a couple of pounds here when it comes to car insurance, maybe you could help that, put that to one side and go out and enjoy yourself a meal, technically for nothing. So thank you very much for your time and attention today. Enjoy the rest of your day, and we'll speak again soon. Take care. Bye-bye.